So we're here today with Simon Dixon. He's an early evangelist of Bitcoin, founder of 뱅크투더퓨처, man of great insight, and a very well-known figure in the blockchain space. He also wrote the first book on Bitcoin is it in 2012?
That was when it was published, yeah. I started in 2010.
2010, okay. And I believe that's like 2 to 4 years ahead of mastering Bitcoin. Okay.
Yeah, most likely.
Okay. Thanks so much for joining our channel, 궁디파파. So Simon, can you tell us a little bit about how you got involved with Bitcoin and your work in the early days?
Sure, yeah. I mean, so I guess it all started from economics. I studied economics up to master's level in the UK and disagreed with much of what I learned, but I used that to get a career in investment banking and worked a few years on the trading floor for the London Stock Exchange for an investment bank and worked doing IPOs in corporate finance. In 2006, I decided that I wanted to throw in the corporate ladder towel, and I decided to return to some of my beliefs about money and economics. And so I just did a deep dive into the subject of money and money creation, and started presenting around the world on what I thought was a real misunderstanding in the nature of money. Unfortunately, no one was really interested in the subject. I spoke at about 200 different universities at the time, but eventually the financial crisis happened, and that led to people being interested in the subject. And then I spoke at an event and was invited by one of the very first early Bitcoin investors to speak at the very first Bitcoin conference in the world. When I spoke at that conference, I was also writing my book, Bank to the Future, and learned about how Bitcoin was attempting to create sound money without a government and without a central bank. And really, I was looking at many solutions in central banking, and it looked like if Bitcoin could prevail, it had a solution to some of the problems around the world's misunderstanding of money and the effect that has on the economy. So I came very much from a finance and economics background, spoke at that first Bitcoin conference, was fortunate enough to meet many of the early people, made some early investments, and just stuck around the industry ever since, invested in many of the early companies, and have been evangelizing the industry since, and very proud to see it grow into what it's become today, having a global impact all around the world.
Thank you, Simon. I was also fortunate enough to hear one of your talks in 2014, and through one of your talks, that's when I first learned about Bitcoin. So I really appreciate that.
That's good to know.
And that's why this is a very important event for me. And over the past several years, there's been so much growth in Bitcoin and in the blockchain space. But I'm also curious about your views on Ethereum and dApps. I know that BFT is also an ERC20 token, but we haven't seen a lot of dApps succeed yet. So, and a lot of people are kind of skeptical about the viability of smart contracts. Could you please share your opinion on this?
Sure, yeah. So the first thing to point out is that for those of you who don't know the history, Ethereum was an ICO that was funded by the Bitcoin community. Very early on, there was a few attempts at building this concept of smart contracts, which was self-enforceable contracts that needed no central party or intermediary in order to enforce the contract by using code and some of the proof of work and concepts that were created from watching Bitcoin grow. The important thing to understand is that Ethereum was never created as a competitor to Bitcoin. It was created as a smart contract platform, and therefore it didn't have many of the properties of sound money. So for those of you that don't know, Bitcoin has many properties of sound money because it's money that you can own, it's money that you can spend, without any kind of censorship or person in the middle. And it's also got a fixed money supply, meaning that the code can never be altered without the community reaching consensus, and therefore it's very, 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 very hard to change anything about Bitcoin, making it a very good and the world's best shot at producing a sound money system. Ethereum is very different. It's inflationary. It has an unlimited supply, and it was set up not to, do anything that Bitcoin does. It was designed as a smart contract platform, optimized to be that, and consequently, it's had much more disruption in the venture capital and IPO market because it created a mechanism and a standard whereby people could launch tokens, and those tokens could be sold either for access to software or as an alternative to an IPO or venture capital funding, if they do it in compliance with securities laws. So the two are really very different things, and while Bitcoin is so much harder to alter, and we saw that with the scaling debate, and that's what gives it its properties as sound money, because it's highly decentralized and very hard to change. Ethereum built a community around fast changes, so that changes the proposition of immutability. We saw that when very early on Ethereum reversed its chain as a result of a lot of the early investors losing money through the DAO hack. And so while it's less immutable and less decentralized, it's the second most distributed proof of work blockchain that we have out there. And therefore it has really captured a lot of the market. It's a much more risky blockchain. It doesn't have many of the properties of Bitcoin. But the two are very complementary, and we saw that throughout 2017 when we had a sound money attracting institutional investors and people that wanted to hedge against the risk of some of the financial challenges that we have ahead. And then Ethereum got a lot of traction around launching startup funding, new ideas, software access, and disruption in the IPO markets. And so the two together really boosted the growth of crypto, and using Ethereum, people launched many, many, many tokens, which just, increased the number of user cases. So the final part of the question was asking about dApps. These decentralized applications were often built on top of Ethereum. In the future, they'll be able to be built on top of Bitcoin with new innovation like RSK coming out and Lightning Network protocol developments and many other technology that we're seeing being built on top of Bitcoin. But at the moment, it's all being done on top of Ethereum. Now, what the market has shown, and my belief, and the reason I came to this, is I believe that the cryptocurrency industry creates mass disruption in financial contracts. So for me personally, I believe that the number one application of what Ethereum or other blockchains or Bitcoin will be used for in terms of layer 2 solutions and tokens is disruption in financial markets. So financial contracts are the first contracts that I think can use some of the immutability and decentralized properties of using a protocol as a settlement layer for these financial contracts. But we haven't seen much else be useful. The reason for that is because in most cases, a centralized database is faster, cheaper, and can resolve challenges experienced by customers better than a decentralized network, which is slower, more expensive, and clunky, careless user experience. But you use it when you want decentralization. So if two people want to enter into a financial contract, such as an ICO or a futures contract or a derivative, then a blockchain can have significant improvements from centralized clearinghouses, potentially. But we've seen the power of taking out many of the brokers and the stock exchanges and many of the intermediaries in putting together investors directly with issuers, and that's the user cases that we're seeing. So it's my belief that the crypto industry is disruption in central banking with Bitcoin, disruption in retail banking with Lightning networks, and disruption in capital markets with Ethereum and smart contracts and other blockchains that might fulfill that user case. And then disruption in derivatives. So to me, this is a complete overhaul and upgrade of the financial system and the potential to build it all upon sound money and offer people an exit from the traditional financial system should those centralized intermediaries not be producing value for the customer, and then they've got the decentralized option.
Okay. Also, could you give us an overview of Bank to the Future and what problem it solves?
Sure. So Bank to the Future was something we started in 2010. And in 2010, there was something called crowdfunding, which was companies like Kickstarter and Indiegogo. And about 3 companies in the UK, one of them being Bank to the Future, was set about disrupting the venture capital market by allowing people to invest in private equity and shares in private companies online. It took us 4 years to persuade the first regulator in the world to be able to allow us to do that, and the other companies as well, and that was the UK Financial Services Authority, it was called at the time. The challenge was that we were required to only raise funding from UK investors for UK businesses. Now, at the same time, I was watching the growth of the crypto market. We were investing in many of the companies in the industry, watching some of the very first ICOs evolve in 2014 with Mastercoin and MadeSafe and Storage and many of Factum and many of the early ones throughout 2014-15, I think it was. And so while we launched the company, we wanted to use, because our crypto investments had done so well, we wanted to use banktothefuture.com to create a global online investment platform that allowed people to invest in the growth of the disruption of the financial markets. And people could invest in equity in those companies. And in 2015, we had to relocate and create a more global structure because of the limitations of doing it from the UK. So we registered with the Cayman Islands Monetary Authority. I relocated to Hong Kong. And set up a more global structure with a network of broker-dealers in different countries, depending on the jurisdictions we were looking to target. And we allowed our investor members to actually invest in many of the early companies in equity for some of the big names today, like Bitfinex, Kraken, BitPay, Bitstamp, Unocoin, BitPayza, Bitso, and about 100 different others. And so the early investors in Bank to the Future managed to get equity in some of the companies that failed, but some of the most valuable companies in the industry today. At the same time, we were watching the ICO market come along and do what we originally intended to do. So the early ICOs had a completely global audience because they had a global currency, Bitcoin, in order to transact and purchase. And the crypto market was very much globally focused. And then obviously when the Bitcoin community funded Ethereum, and then Ethereum several years later led to the ERC20 standard, that created the perfect environment in 2017, whereby you could have mass growth of the industry. And wherever you have massive growth, you had people copying each other and forgetting that regulations existed. So we'd always done everything in compliance with securities laws. And when tokens started disrupting equity, we continued doing everything in compliance with securities laws. So all of the tokens that were sold via our platform were actually sold in compliance with securities laws to the best of our ability as a security. And so while we were investing in much of the decentralized, open innovation that was happening in the industry, we also knew that these were eventually going to have to be sold in compliance with securities laws as the regulators catch up with the innovation. And so banktothefuture.com spent all those years working on complying with global securities laws, getting the registrations and building a platform whereby investors that were qualified to invest in this asset class could co-invest in anything that we were investing in, whether it be tokens, whether it be security tokens, utility tokens, but also traditional equities funds in the Bitcoin and blockchain industry. And we're that's still what we're working on. And so the value proposition of banktothefuture.com is really a way of finding access to deals that very often today the token sales and the deals all go to the venture capitalists, especially as the regulations are getting tighter and the crowd is being crowded out, as it were. So at Bank to the Future, whenever we get access to deals, we share it with all of our members. So an example is one of the most eagerly anticipated token sales upcoming is RSK. It used to be called Rootstock. And because Diego is on our board of advisors and we know we get invited to these deals that are now just being done on an institutional level because of the regulations. But because we can take up an allocation from RSK, working our relationships as shareholders in many of the industry, whenever we get an allocation, when we can compliantly do so, we tend to share those deals with our members on Bank to the Future, and we created a membership token around that whole ecosystem of rewarding our members and our token holders.
Could you elaborate on the role of the BFT token?
Sure, yeah. So in 2017, we launched the Bank to the Future token. The ticker symbol is BFT. And we've been working on integrating it with the platform. Up until this point, we've only had a couple of user cases, but we're rolling them out one by one. The first thing to note is that we did the whole token sale in compliance with securities laws. Where there was US investors, we registered it, filed the correct forms with the SEC in compliance with the exemptions and did the accreditation and things that we needed to do. And we allow people that are seeking funding to follow a similar format through our platform. But the utility of the token, which is currently, is currently traded as a utility token. It's not a security. It's not shares in Bank to the Future or anything like that. But it trades on some of the exchanges like Bitfinex and Huobi and Etfinex and Gate and some others you can see on CoinMarketCap. Was designed around solving three major problems for the Bank to the Future community and platform. The first problem we had is that we needed an efficient way of allocating priority access to the deals, because when we had a deal that people were very excited about, it would sell out very quickly on the platform. So we created a membership tier whereby those who own 10,000 BFT and deposit it onto the platform, they get 48 hours head start on some of the deals, and some of those deals just sell out within those 48 hours. So the token holders get access to deals that sometimes the platform wouldn't get access to. And all you need to do is hold them on your banktothefuture.com account and be a qualifying investor. But there's different utilities that we're rolling out right now. So, for example, token holders, they do a lot to contribute to due diligence and investor relations on our platform. So when we launch a deal, there's a pitch forum. People contribute to providing additional information. We want to reward our token holders for providing useful information that our investors find useful. So we've just launched into beta our new companies page section of the banktothefuture.com platform. And those that have 10,000 BFT deposited are able to update those company profiles, provide due diligence, and they will get rewarded for the investor relations. So it's a rewards token as well. And then the final thing, in October this year, we're set to launch our secondary market. What that means is that because we accumulated lots of equity in some of the most valuable companies in the industry, we want to provide a way for our investors to sell that equity compliant with securities laws through our platform. And what that means is that some of the early equity that we accumulated, and maybe you join the crypto industry late, people will be able to buy that equity from other investors, and we create a secondary market for that equity where it can be traded, and then we can, put some of the pricing on some of the shares that are on our platform. And so really what the BF token does is you will actually be able to get discounted trading fees. You get 50% most likely discounted trading fees for holding BFT on all secondary market trades. And then the final thing, in 2019, we're actually in the process of getting the licensing and aiming to launch a securities token market, depending on regulations, because we spent so much time, working on those regulations in the past. We think that translates into the securities token market, and perhaps we might disrupt ourselves with another platform that's kind of more in line with the technological innovation that we've had as this really exciting industry evolves.
One of the concerns that I have is even though a lot of these blockchain startups, blockchain projects are very innovative, it seems to me that the performance is really dependent on the performance of Bitcoin. Wouldn't the performance of BFT also be dependent on the strength of Bitcoin than the actual performance or utilities of the invested projects of BFT?
Well, the utility token, Bank to the Future token, was designed as a membership rewards and payment token. It wasn't designed as a speculative investment. We will launch a securities token for Bank to the Future in the future, which is designed to reflect the poor performance of our actual company as an investment. The token is meant to be correlated to the strength of how we build our network, the growth of the securities token market, and the utility that our token actually provides to our community. You're totally right that one of the market seems to have moved to a very correlated way, but I believe that the user case of sound money, which all of this is built upon, is kind of the driver. So if you look at the stock markets and bond markets, it is very much tied to the economic performance of the currency and the companies within that economy. So if you take the Nasdaq, it's very much correlated to the performance of the US economy and the dollar. In our world, everything's correlated to the performance of Bitcoin as sound money and the protocols that will be underlying a lot of these financial assets. And therefore, a lot of these tokens are a way of diversifying around having full exposure to just one asset class. Where that is all going to go in the future is anyone's guess. It's interesting that we've moved towards a correlated market. But then we will see. I mean, anything can happen in crypto. One thing I've learned in crypto is that, and one of the reasons we founded banktothefuture.com, is that the market continually proves us wrong all the time in crypto. Every time I'm sure of something, someone comes along and shows something to the otherwise. It's a very exciting space, and the only way that we believe that crypto was going to disrupt the entire financial market one step at a time, and the only way we could be exposed to that was by investing in everything that we thought had a reasonable chance of success. So we diversify across it all. I mean, the industry is definitely tied to the performance of Bitcoin, but we'll see where that goes and what happens next.
I remember you saying back in 2014, so Bitcoin still has the problem of volatility, and a lot of it is the future is unknown, but now we have the rails to build financial innovation, and that really it gave me a very strong impression back then. Also, could you explain what are some advantages of investing in private equity deals compared to investing in cryptocurrencies?
Well, I guess it's a very different thing. So a cryptocurrency, you've got to look at the unique user case and value that they're actually tackling. So for me, Bitcoin is tackling the problem of sound money and the performance of Bitcoin, I believe, will be correlated to government politics, the bad news in the financial system, and the continual censorship of money that leads people to want to find censorship-resistant money. Ethereum will be, I believe, correlated to the disruption of the financial markets, the IPO markets, as more people choose this mechanism. Then I think the stock markets are the losers in that sense. Monero, for example, is about money when you need absolute privacy, because Bitcoin doesn't give you that. Litecoin has become a test bed for innovation in cryptocurrency, so that we can, for example, Litecoin got SegWit and Lightning Network before Bitcoin, and that helped get it onto Bitcoin. And then there's lots of people like EOS and various others that want to come along and do disruption in Ethereum and create more centralized but more scalable blockchains. Then you've got equity. So equity gives you voting rights. It gives you, it's a very understood asset class where you may not have any rights within a token economy, but the advantages of this liquid. So our goal with equity, and really why securities token and the secondary market's important to us, is because we believe that equity had many of the investor protections that people want, but because it wasn't liquid, people moved over to tokens because they could sell those faster and they could access to their money or Bitcoin when they needed it. So if we can achieve a similar result for equity and make equity great again by allowing people to have it more liquid, then I believe equity is what everybody actually wanted in the first place when making some of these purchases, but they couldn't get it because it was never open to them and it was never liquid. So really, I think equity has a lot of advantages. I think tokens have a lot of advantage. I think Bitcoin is a complete asset class in its own, and really, I would say it's running a very diversified portfolio, depending on what you're looking at getting exposure to, and they're all very different things.
Earlier, you mentioned that BFT is a utility token and also a reward token.
Yeah.
But what about, you also mentioned that in the future, you might also issue a security token for the Bank to the Future platform?
Yeah.
Correct. Okay. So how is Bank to the Future planning to respond to security tokens and security token platforms like Polymath or T0?
So Polymath and T0 are both companies that we've worked with. I'm an advisor to Polymath. T0, we hosted some of their funding round on Bank to the Future. Really, we're here to support the industry. I'm really excited because originally, when we started Bank to the Future, there was just not enough interest in the industry to even complete a funding round. The funding rounds were a lot smaller. Then the token industry grew to such size that it surpassed venture capital and started to challenge the IPO markets. Now, obviously, regulations are coming in when something gets that big, and therefore we've got to rebuild a whole ecosystem. And so our response at Bank to the Future is to launch our own securities token. But you've got to look at what happened with the growth of the utility token market. Why did it work? Well, the reason it worked and grew liquid is because there were multiple exchanges and standards in order to create and launch these tokens. So the ERC20 standard was built on top of Ethereum, which meant that lots of tokens could be issued. So companies like Polymath, and we're also advisors and investors in other ones like Securitize and other parts of the ecosystem, are building the protocols that will allow issuers to issue security tokens. But once the tokens are actually issued, they need to be marketed compliant with securities laws. So Bank to the Future has a platform whereby we have 65,000 accredited investors. So we just launched our first securities token for lottery.com, which was done by Securitized, which is one of these protocols just like Polymath. And then we partner with them to actually get some of the subscription done and help them, our investors, and then they can build the protocol to issue the tokens. And then those tokens will need to trade. So we're launching our own securities token exchange. T0 is launching their securities exchange in compliance with the US securities law. But the thing is, the US securities law is actually one of the worst laws in the world for actually producing a secondary market for blockchain security tokens. So they have their 1-year lock-in, and you have to apply for an ATS, and an ATS means that you can't have an order book, and you can only have an OTC market where you can't actually see the prices. It has to be all quoted. So we look at other jurisdictions, and while we could partner with an exchange like T0 that's doing it in compliance with US securities law, we can also build, in compliance with overseas territories which have less restrictive and more suitable. So, for example, Malta, Gibraltar, Isle of Man, and Switzerland and other jurisdictions are building fit-for-purpose regulations for securities tokens. Then you've got jurisdictions like Hong Kong, where actually it's very clear what a security is. So, this is what we've been working on for many, many years. So I don't think the right approach is to put everyone through US securities law, but T0 will focus on, servicing the US market. But if you look at what actually made the crypto industry grow in 2017, well, it was a standardization, ERC20, so exchanges could list these tokens very easily. And then they had we grew deep liquidity across multiple exchanges so that traders could arbitrage across the different exchanges. In the securities token market, if we just do what the stock market did, where they tried to create haloed monopolies of issuing stocks on the London Stock Exchange or on the New York Stock Exchange or on the Tokyo Stock Exchange or on the Shenzhen Stock Exchange, and then you create a monopoly in those exchanges, then we've done nothing new. However, if you can take your security token that's built with a protocol like Polymath, and then you can move it from T0 to Bank to the Future exchange to the other exchanges, and you can arbitrage across the two, or the three, or the four, then we create some of the success of the crypto industry, and we build an ecosystem that can compete with traditional stock markets, and then the stock markets will launch their own. We had an ATS in the States, but we sold that to Coinbase because we thought that the US securities law weren't fit for securities tokens. And so Coinbase will go off and they'll build their securities tokens like T0. We've had Circle, and then we've got all the jurisdictions around. And we're here at Bank to the Future to support the industry. We want to see this industry grow. We want to see this industry happen. And therefore, we support what might be perceived as competition, and we collaborate and partner with them so that we can create. Because if those that weren't around, crypto was very illiquid and very hard in the early days, and so it wasn't always what we saw in 2016, 17, today and beyond. I imagine the securities token ecosystem is going to go through the same learning curve and growth curve, and so there's room for a vibrant ecosystem. And as our market cap of the industry grows and grows and grows, those that were patiently, holding and diversified across the entire industry in these, what I consider the early days of the growth of that part of the industry. We've had the wave of, we had Bitcoin as sound money, we then had altcoins, we then had ICOs and tokens, we then had hard forks where you received free money just for owning Bitcoin, and now we're going to see securities token. And I believe those that are building a diversified portfolio across the next 5 years or so are going to be the people that are going to be rewarded for this industry, as opposed to the traders that are dumping in and out. If you look at some of the investors on Bank to the Future, the ones that have accumulated significant wealth were receiving Bitcoin dividends in the early days as a result of investing in some of the companies on our platform. They were involved in things like Ethereum where we did a portion of a lot of the mining in the early days of Ethereum through the platform. And the ones that were flipping those and trading those are still in the same position where they're trying to build wealth, whereas the people that just held it and diversified seem to be in a position where they've accumulated significant wealth now and are diversifying further across the industry. And what Bitcoin does as sound money is it rewards the saver and punishes the speculator and trader often. You might be one of those 10%ers that made all the money by speculating and trading in and out and calling the bottom and calling the top, but most people don't. 90% don't. The people that I know that got wealthy in this industry were the savers and the diversifiers.
Simon, I remember when you visited Korea, we met very briefly. And so there's this huge cryptocurrency craze in Korea. If you walk down the street, people are talking about Bitcoin. If you go to a cafe or a restaurant, people are talking about some new altcoin that even I'd never even heard of. What was your impression from the Korean community? And do you have any suggestions on how it might improve or find a way to conduct self-governance?
Yeah, so my impression of Korea, the multiple times that I visited, and it's become a really important, hugely important economy in the crypto economy, is that it's gone through the same curve that many of the other earlier economies went through when they discovered Bitcoin. So some of the early adopters were Europe, US, and China. And Korea was a bit late to the party, but boy, did they come in when they came in. And what you see mainly is cycles where most people get into crypto for the first time because they want to make more dollars, or they want to make more pounds, or they want to make more euros. And Korea came in and decided that this was their opportunity to make some more Korean won. Vast wealth was produced from those that got on the right side of the pump. But Korea was, a large percentage of the volume behind a lot of the speculative bubbles that were created in 2017. And so I should imagine that there's quite a lot of people that either accumulated vast wealth, and there's others that were very burnt because they bought these tokens at the top and they kind of sold at the bottom because they got despondent and never understood the industry. But that's exactly what happened in the other economies. So I've personally been through a crash of Bitcoin from $30 to $3. That's a 90% crash. I've seen 1,300 to 250. That was a 75% crash. And I've seen more recently, like most of you, 20,000 down to 5,000, which was, and back up a little bit now, where it's about a 70% correction. But the people that lost money are the ones that didn't really didn't understand the industry, and didn't learn during the bear markets. So my message to the people of Korea is that, if you're in the Bitcoin industry, risk reward adjusted, I don't believe that there is a better asset class that's high risk, but that can produce very high returns for the saver if you accumulate over a 5 to 10 year period and get diversified. I can't give financial advice. This is highly risky. This whole industry could fail. But my experience tells me that the saver is rewarded rather than the short-term speculator. And I've seen a lot of people in this whole crypto industry go from seeing the whole increase of Bitcoin from sub $1 all the way to 20,000, and some of them never accumulated wealth because either they had to spend their Bitcoin along the way, or because they were trying to trade it and catch the tops and bottoms and never got on top of that because it eats people alive. So for Korea, crypto is no doubt in my mind the disruption of the US dollar as a superpower currency, the disruption of Wall Street as a superpower financial market, and the disruption of Silicon Valley as a superpower hub for tech startups and early stage companies. And whichever economy gets that right, whichever one gets their policies right, whichever one gets the right balance between regulations and innovation, has got a multi-trillion-dollar market to capture and take advantage of. But this is David beat Goliath. The Maltese government has just as much opportunity as the US government, which has just as much opportunity as the Korean government. And who wins is really a function of political, regulatory, and banking synergy about how they're going to react from here. They could either follow China, ban it, and give all the business to Korea, Singapore, and Japan, or they could follow Japan, regulate it, and try and capture the data and understand the market, make it legal tender, and try and capture it within the industry. Or they can just lose the industry, lose all the jobs, lose all the employment, lose all the disruption to other economies, and it will all be done within your economy in a decentralized way anyway, because this industry is going nowhere. It's unstoppable. The cat is out of the bag. And I believe that we're looking at one of the most exciting times in financial history. And anyone still on this call or listening to this is still an early adopter. The day you know you're not an early adopter or it's too late is when everybody in the world knows that Bitcoin's not a scam, not a Ponzi scheme. If you still hear the majority of people think that Bitcoin's a currency for drug dealers, it's a Ponzi scheme, or it's a scam, then you know you're still an early adopter. Once everybody knows that it's not, and then you realize you are at the phase where Bitcoin might become a medium of exchange and be used as a currency because there's not much more upside and it's become a very stable asset.
Simon, if people want to get involved with Bank to the Future, what's the best way to do? What's the best way to get involved?
So firstly, see if you qualify, because we have to do it in compliance with securities law. So go to banktothefuture.com, register for an account, complete your KYC, do your verification, update your investor status, tell us what type of investor you are, and then you can have a qualifying account. Next, I would suggest, if you want to get priority access to deals and see the deals before everyone else, then you're going to need 10,000 BFT, which you can purchase on an exchange somewhere, and then you can deposit those to your banktothefuture.com account, and then you become a priority access member. Yeah, that's how to get involved. If you're a company that's doing financial innovation and you're seeking investors and want to reach out to our 65,000 investor community, then you can apply for finance, and we'll take a look at your application. We do get a lot of applications, but we get back to all of them with a simple yes or no, and we tend to list most months we launch about 2 deals.
Okay, thanks so much, Simon, for sharing your opinion. It was super interesting to hear learn about Bank to the Future and your views of the future. And you've been and thanks so much for your work to the community, and it's tremendously important work. And thanks for joining us today, and we look forward to hearing from you again.
Yeah, thank you very much. One of the most important parts of our industry is education. There's so much to learn, and so anyone that's creating valuable content and spreading the word is doing a service to the crypto community. So thank you very much for your work as well.
Thank you.